Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to continue with a bigger picture view as well as the micro analysis that we do in virtually every program. We're going to bring everything up to date, but also in today's program, I'm going to look at the mindset for wealth affirmations. As you know, we do affirmations from time to time and personal development for various things, and it's a general outlook of becoming successful. But today I'm going to do the mindset and focus just on the wealth affirmations. But before I begin, the usual polite reminder, please remember everything in my video is for educational purposes. Nothing should be taken as financial advice. Please do your wider research before you make any investment decisions. So with that out of the way, I'm going to start off with the mindset for wealth affirmations. And please remember, when you say these affirmations, you must say it with total conviction, with total belief, and a total deep feeling that this is what you really mean. Okay, the first one is, it's easy to earn $1 million doing what I love. I am always visualizing $1 million lifestyle. Being wealthy is a big part of who I am. I am a millionaire. I easily earn millions of dollars. I deserve to be rich. It is my birthright. My mind is attuned to becoming a millionaire. I see wealth, abundance, and prosperity everywhere I go. I work to create massive wealth for myself. Financial opportunities are always there for me. So that's all the 10 for now. Now, obviously, if you're already a millionaire, which I know some of you are, therefore just change the millionaire to a billionaire. It's really that simple. Always remember, if one person in the world can do it, you can do it too. Okay, so I'm going to start off with the bigger picture view, and I'm going to have a look at the monthly time frame with the 8 EMA, the blue line here, and with the 21 exponential moving average being the yellow line here. As we can see, we're still quite clearly below the 8 EMA on the monthly chart, and we'll keep updating this towards the end of the month as well, just so that we know exactly where we are. We need to really know that currently, whatever people say, this chart is saying quite clearly that we're still in a bear market. However, if you look at the tops and bottoms of this chart, you can see quite clearly we made a higher high and a higher low. So the longer term, we can quite easily do this and get off there. So firstly, on the shorter term, it does look bearish, but in the longer term, it looks quite bullish. The heartening thing is that we are finding support on the 21 exponential moving average here. But if we do break this, then we can have a look at the simple moving average and see exactly where it could fall down to. And this is the simple moving average on the monthly chart, and even on the simple moving average, the 21 is providing a lot of support for the price. But should we fall below this, then the 50 moving average is the one that we're going to find support around there, and that's at around about the $20,000 mark. And as you can see from previously, this is where we found support around these levels in the past. This is the weekly chart, and we're having a look at the exponential moving averages again, the 8 being the blue and the yellow being the 21. Once again, you can see how relevant and important this is that with the blue line here, as I mentioned in the last video, for the first time, we've actually now closed last week above the 8 exponential moving average. Obviously, that's a bullish sign, and the question is, can we continue that with the next few candles? Well, the current candle, as you can see, came up to the 21, and we've not gone above the 21 since we fell back in November here. But once again, as you can see, we've got rejected at the 21 at around about the 43,300 mark. So we've been rejected since November once, twice, and now 3 times so far on the 21 weekly exponential moving average. Now, this is the chart that no one will show you because they don't know, but it's a really scary chart, and I'll show you why this is very, very scary. First of all, it's basically the 21 simple moving average and the 50 simple moving average, with this green one being the 200 simple moving average. So as you can see, the 21 simple moving average is about to have a cross with the 50 simple moving average. And the reason why this is significant, and also please notice that the price is below the cross itself, because when we look historically at this, it tells you some very vital information. The last time the 21 crossed down below the 50 simple moving average was back here, just before the COVID-19 situation. And if you notice, the price was right on the cross and the price fell. If we look even further back, after the previous all-time high of 20,000 in 2018, we had the cross, And at the cross, the price was below the cross here. And this was actually a false rally to the top before this happened. Further back, we crossed again after the topping of the previous bull market high in November 2013. And when this crossed, again, it crossed at the price. And immediately after the cross, look what happened. And further back, after the first big rally that we got in 2011, once again, the cross occurred here. Once again, the price action was well below the actual cross itself. And look what happened. We made a false rally before a dump. The common thread here is that this cross normally occurs after we top out. And when it does, there are two characteristics. Firstly, if the price action is actually at the cross, we find a big dump straight away. And if the price action is below the cross, which is most likely here, we normally have a rally, which is then followed by a big fall to the downside. Obviously, no one knows if it's going to follow the same pattern, but this is a pattern that has been followed over the last 10 years. And it fits in with the narrative that I've been saying over the last few weeks, that I'm expecting a big rally, which is then to be followed by a fall. So let's see what happens with that. And you can make of that whatever you wish. It's certainly something we need to be aware of. Okay, on the daily chart, as mentioned before, we've now captured the 8 EMA, the blue line here, over the last many days. And we've also now gone above the 21 exponential moving average on the daily chart. And each of our rallies in the past have done that. As you can see, the big rally that we had here went above these two averages before falling down, then another one, then falling down. Now we've had another one. And the question is, will we fall down here, or do we have further to go up before we come back down? If we do continue to the upside, the chances are we'll probably get up to about the 52 at the very, very maximum. Otherwise, there's going to be another rejection at the $46,000 mark here. On the simple moving averages, we can see quite clearly that one of the definitions of a bear market is that we are below the 200 simple moving average, which is exactly what we've had ever since we fell down here on around about the December time, end of December, when we were at around about 47,000. So since then, we've never been able to recapture the 200 simple moving average. And we had the death cross here of the 50 simple moving average moving down below the 200 simple moving average. And until we recapture this level here at 47, we're really not out of the woods. So this would suggest we're still in the bear market territory with this dominant trend, as I've been mentioning many times now. And we've had these relief rallies along the way. And the question is, will we get a big rally to the upside to cross over here? My expectation is not, but we have to be dictated by the price action and see what happens. And the Dow Jones Index is providing a little ray of hope in the short term anyway. And as you can see with this, the chart I've been showing for many, many months now, this red zone here was really our concerning zone, that if you get below this, and we came here many times, but we bounced above each time, as you can see. Many, many times we came, but this time we've actually gone below it, came back and retested the previous support as resistance, and then broken down to our concerning zone, which is the second red line here. Once again, we tested that level a few times before we eventually broke that. And again, we came back and retested it, but this time we've actually gone much higher. And the current rally would suggest that there is some hope that with the interest rates out of the way and the other economic conditions all baked into the price, maybe we may have another leg up, and only time will tell, but certainly we need to keep an eye on this as well. And the SP500 is giving us another ray of hope, because as I mentioned in the last video, we came up to this neckline here. And certainly I was expecting a certain amount of a pullback here before we resumed up or turned down. But the strength of this actually blew all the way through this resistance point here. And now we're making our way to the next resistant point, which is at the top of this price action here. So we may well have a few more days before this reaches that resistant point, and that provides hope for Bitcoin in the next few days to go a little bit higher than where it is at the moment. And that may be enough to push Bitcoin back to the 45, 46, or even maybe higher, which I don't expect, but it's obviously possible. If you've been following me on the Twitter, you'll know that yesterday I tweeted two charts here. The first one was the weekly chart, and I was mentioning that we should always be very, very careful not to get sucked into the market while we're having this little rally that we've been having. And I was just trying to bring to people's attention that while this is an impressive rally by Bitcoin so far, the two weekly candles, 1 and 2, this is this one and this one here on the weekly chart, these two, they still have not played out, which makes me very suspicious of the current rally that we're having. And really, the top of this first candle is at 45,426. And if we get above that, obviously it invalidates these candles, then we can jump on board to take it to higher levels. But as you can see, the price action currently is well below this candle. But not only that, the second candle, this one here, is another bearish candle, which again, we haven't yet closed above this, which I'll show you in a second. And I mentioned what I would be doing, that if the prices did go above the 45,426, then I would get into a swing trade and then put a stop loss at around about the 43,340. But as a word of caution, I did mention here that 37.38, which is the bottom of this wick here, is still on the table. So these are the two offending candles here, this bearish rejection of higher prices and the second rejection of higher prices. So we had two weekly candles where big profit taking took place and pushed the price all the way back down to the price where it started in that session. And normally what happens is, whenever you get these long wicks, the following wicks do try and actually test these tops or even halfway through these wicks to see if there's an appetite to take it further. And this is what we've got so far. But as you can see, the top of this wick here, we're still below it, and that price at the top of this wick is 42,597. So we need to close the week above this 42,597, call it 42,600, before it invalidates this candle here. And then maybe we can make an attempt for the next one at 45,426. So keep your eye on this, very important, where this candle, this weekly candle, closes at the end of this week. A very critical week this week. My suspicion is that we may even test this sometime this week before we get a rejection to the downside to at least this level here, these bottom of the wicks here, around about the 37,100 level. And my second tweet was about this candle here, this gravestone doji candle, which I mentioned many, many times. Whenever they appear, you must pay very strong attention to these because they have a habit of actually orchestrating the price action after them. So what I said here was that just as the Bitcoin party gets going, the 4-hour Gravestone Doji gate crashes to spoil the party. And this is what happened. We had a big rally to the upside, and then suddenly we got this candle here on the 4-hour chart. And I said here that I'm expecting a range-bound price between the 43,389, which is the top of the wick, and 42,011, which is at the bottom of the wick, for the rest of the day yesterday. And I said higher probability to break to the lower side here. And if you're not already convinced that this kind of a candle, this Gravestone Doji candle, has a huge sway on the price action after it, how many times have I shown you this? And look what's happening. We haven't managed to get above it or below it. And all day yesterday, we spent the time in between this range here. So what this candle always tells you is that it gives you the parameters during which following price action will be playing out until you get to a point where either the lower price breaks or the higher price breaks. But because this is a bearish candle with higher prices being rejected and pushed down very strongly back down to the prices at the beginning of that session, this has a higher probability to play to the downside rather than the upside. So we'll see what happens. I'm expecting further continuation of this pattern in between this range, which brings us now to the daily chart with this triangle which we're waiting to play out here in this region. As I said in the last video, we're coming to the apex of this and we'll see which way it breaks. So the two prices I'm looking at currently is basically at the top of this top here at 45,426. Should we get above that, then this would be an opportunity for a long trade up to about this level here, which is about 52,000. But if we get rejected here to come back down, then the bottom of this trend line would be a natural place for it to find support, and that's currently at around about the $38,000 mark here. Certainly the breakout is imminent in the next few days. So basically those are the two levels I'm looking at. either 3738 down here or 45400 up here. Okay, so we'll leave it there. I hope you enjoyed the affirmations and also found value in the technical analysis. And if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.